Good morning. This is Abhinav. Today is 28 June 2016. We are looking at our Nifty market. So what we are seeing yesterday on Friday, it ended on 8170, and today we expected a gap open with a gap down. So that was unexpected line, and even the up move from gap down was pretty anticipated that it can happen. There was more than 60% probability of uh, doing that, and today that exactly what happened. We looked at now. The Nifty was open at 8116 and went up to low of 8107. Then it was clearly evident after passing this range that it will go. There was an upward movement. One could have taken trade up to here, at this point to this point, and there was one more trade, and again this trade was clear after some time. We will look at 1 minute chart. How it happened. I hope you have taken the trade. See what I was saying earlier. The trade here was this one. When you're looking at a trade and the market opened with a gap down, and what it was showing was a higher upward pressure with these two bars. Open with high, and it went down and it closed all those bars and it continued to go again. So at that point, one could have taken a trade up to this level. Similarly, at the same time, there was no clear downward pressure, continuing downward pressure like this. There was no continuous downward pressure, so we have taken a downward trade. So here we could have taken this trade that was on the 5 minute chart also up to this range, and at this point also we could have taken a trade on the upward direction because this point uh, there was still probability that it could have had this on one, but after this bar it was clearly known that there was still buying coming in the market, and we could see this in this bars this in this leg. So that was a trade. We could have avoided this trade, but this was also a trade. We have avoided that, and if also taken it would have been a 50 chance because the market has already gone up from 8116 open to 8190. So there was a more than 50% chance it might have gone down after this loss. So it was showing some downward pressure, but the downward pressure should come when bars are getting bigger and there is a pressure on the outside. But here you could see the bars are getting smaller and smaller. Means the market was converging on the price point. This, so trade, and after this market went flat. So at this was a high point. You could have taken your move for profits. This range, 819, very good range. Same thing here. We have to wait. If we want to take a next trade, we have to wait till there's a good range. Market come down here and try to go back, or market come down here, or it we fell down to the next yesterday's close this range. So How the bars form at this point of time will determine it can go up or it can go down. So based upon that confusion, we can determine we have to take this trade or this trade. So the formation of bars and the pressure will clearly show us direction where we should take the trade, and that can be easily identified how the bars are formed. Let's look at the Nifty futures market. Okay, we have looked the take a trade here, here, and then this change to this range. And again from this range to this range after it was clear that this was a good trade. Same thing here on the one side. The market has moving in this direction. The bars right now, the bars are forming downward pressure. We are expecting this to reach this here, this line, this level. After looking at 1 minute chart, you may say it's a 50-50 chance that it may go or not, because whenever it is coming to this level, we are clearly seeing some buying coming in. Even it is at a very low range, but still there is buying coming here. So you can say that this upon watching the Nifty spot market, there's a less chance that it will go down to here. So let's see how the bars form, and depending upon this bar, we can see how the market is taking place. And this is we are looking at 5 minute charts. 5 minute charts give us a good eye on how the market can actually look at the market was in random here and now see some sideways movement and again can let move up to this level. There is still chance on looking on 5 minute charts that we do know. So at this point we have reached this point. Now it is really important how you will trade at this point. If we are new to trading and I'm not sure trader just started, there is a chance that you just think this market will go down very easily and you just have taken a trade here. So uh, how to be patient that because total the down move up to here may not play very well. So you have to look for trades in the upward direction because total direction of the trade is upside down, upward direction. So whenever there's a good chance you need to get a buy after seeing good bars on the upside, you need to take an upside trade because bars forming like this will be there is very less chance and probably we will be low that your trades will be profits because these are exceptional trades because it happens, but that time when you're taking the trade is very crucial. You could have taken a trade, but profit could have been not that big. And see how it will because because it's still 50 because if the market is making bars like these dodgy bars that are made this bars like this, and after this, seeing this, so you can go up and now we have to look in the market and market factors what are affecting it. Okay. We'll see how will end the market after European Open. Thank you.